All right, everybody, we are back yet again. Thank you so much for tuning into Blockhouse. We're here to talk about the new era of confidential finance, and I'm here with the GOAT himself. Howard, man, thank you so much for coming. We're so excited that you're here.
I'm glad to be here, Will.
Thank you, man. And while we're getting into it, you and I have met before, but I would love for the audience who's not as familiar, just tell us a little bit about yourself and what you're building.
Sure. Well, I'm Howard. I'm the founder of Aleo and also the CEO of Provable. We've been building out Shield Wallet this year, which is a privacy-first multi-asset wallet. We also have something exciting coming up in the next week that I'm happy to talk about as well. And I think it's going to lead right into the segment, which is basically ushering in this new era of confidential finance.
Very exciting, man. And I'm curious, before we get into the topic, what were you doing before this? Like, how did you get into the field of crypto and Web3 and technology? Like, how did that journey begin?
Well, I've always been a techie since I was a kid, so this has always been kind of my calling. I got in crypto when I was in high school. Actually, I was really into mining and into Bitcoin mining at the time, and it wasn't until my time in university where I started to get into the research side, the cryptography side. So, I really have taken a very academic approach to it. We actually started Aleo based on a research paper about how to build private smart contracts. Originally, the lab that I was in, my advisors are all co-founders of Zcash, and so we built out this system, this framework for what is effectively private Bitcoin, and we were asking ourselves, how do we build private Ethereum? And so that was actually the inception that sparked Aleo. We started the company 7 years ago, and then basically throughout in 2024, we then launched with Coinbase as our day one launch partner, and ever since we've now been building up the stack towards more and more greater things.
Man, I love that. And I love all the shout outs to other, cryptographer and privacy oriented folks in the space. And I know today we're talking a little bit about privacy, but we're really leaning into this, what you've coined as the new era of DeFi and confidential finance. So I'm curious for the folks that are tuning in and that are curious of what this means, like what does confidential finance and this new era mean to you?
Well, first off, I think that you see that crypto, generally speaking, is growing up. We're institutionalizing. The stablecoin movement in the past 2 years has been incredible. We've also seen on the regulatory side now there's Genius, there's Clarity in the U.S. These are all things that I think are very much instrumental to the evolution of this space in this industry. And what I think is going to start to happen is that we're going to start to see a lot of TradFi move on to crypto rails as time goes on. And in order to do that successfully, we need to be prepared. I think one of the biggest gaps in the market today is the lack of confidentiality and proper compliance for crypto rails. And what I mean is that when you look back 10 years ago, everyone was arguing and debating about TPS, who has the faster chain, who can process more transactions, who has more throughput, all this stuff. That's now pretty much been solved. Like that is no longer the blocker. And yet, people still ask, why hasn't crypto gone mainstream? Why aren't our parents using it? Why isn't this still, and to be honest, I think my answer would be privacy. Confidentiality is the last mile. It is the thing that is missing. And I think it is also the great enabler that will allow people to start to use this. To give you an example, right? When you sign into your bank account today, your best friend doesn't see your balance. Your parents aren't looking at how much you're making in that account or how much you're spending or where you're spending it, right? Like they don't see, and other people can't see that stuff. But if I were to send some money to my best friend or send some money to like my parents with USDC on Ethereum, for example, they now know my wallet balance. They know my wallet address. They can now see everything, how much I make, how much I spend, where I spend it, yada, yada, right? That's, in my opinion, a broken user journey of money. That is not how money works in practice. And Web3 has not done much to solve it. So I think that this is a very clear example of where on-chain finance needs to go. It needs to start to demonstrate and grow up and basically provide some level of protection to the user journey itself.
I love that, man. And some of the reasons that I got in this industry in the first place, right, is it touches on a lot of this. We've had conversations today talking about how this relates to data and the importance of making data more private as it relates to AI. We've talked about the need for more regulation. We're talking about the Clarity Act and the Genius Act. So I really appreciate this, view of confidentiality in finance. And, but on the other side, I'm curious, when most people were talking about blockchain for a long time, there was this idea of it being transparent, being one of the main core cruxes of it, like public ledgers. I'm curious how you would speak to someone who's listening to this and agrees with you on everything that you just said, the same way that I do. But then at the same time, they're looking at how blockchain transparency is one of the pros of the industry. So I'm completely with you. But what would you say to someone like that hears this and brings that to you?
Well, I'd start by saying first off, the transparency of blockchains is both its greatest strength and its greatest weakness. Satoshi himself even said back in the day that if it were possible to make Bitcoin have full privacy, they would have. And you can go onto the Bitcoin Talk forums and go see actually Satoshi was playing around with the idea of zero knowledge proofs even back in the day, trying to figure out if there was a way to do this. And Satoshi wasn't able to figure that out. And so, I think that this concept has been very intrinsic to the space. Just leading with that, I would just say more broadly speaking, there is ways to strike a balance. Just like when you look at the early internet era, when everything was completely unencrypted, all web traffic was unencrypted. Everything you send, anyone along the wires could see it. That created a lot of downstream implications. What do I mean by that? You couldn't put your credit card number on a website. Why? Because the minute you hit send, anyone along that wire between you and the website could then read your credit card details, steal your identity, and go take your money. And that was a huge issue. And then, if you guys remember, a decade or two ago, we started getting the padlock on your URLs, right? And that meant that we introduced this thing called HTTPS, which was to secure your website connections. And that introduced end-to-end encryption and end-to-end tunneling so that when you're sending your details over the wire, people aren't seeing your credit card. And what did that lead to? It led to the explosion, this extreme Cambrian explosion of e-commerce. And because of that, trillions of dollars of value was created from that. And so this is where I say, when you look at it from an analogy standpoint, with blockchains, we're almost in the same world as where the internet was in the 90s, where basically everything is unencrypted, everyone can see everything, and because of that, it behaves more like a phone book than anything. It's like in the 90s, you go to Hilton.com, and it's like, here's a picture of our hotel, here's the address, here's the phone number, call us if you want to make a reservation, right? And obviously that's not how this works today. Today, everyone is now on websites where you're effectively making bookings on there. You have an account, you're storing your details, all this stuff, right? And that is kind of the magic. And so, from my point of view, I think that this is where the technology is going to go, because this is going to unlock so much of the user journey for crypto that doesn't exist in the real world today.
Wow. Yeah, no, that makes a lot of sense. And I appreciate the answer. And we're talking about this as it relates to the average person. But when I'm hearing you talk about this, I think about things like government and all this institutional and government attention that's coming into crypto. How are they going to be able to participate when everything's on chain, right? And transparent. I'm curious how, you look at this when it comes to hedge funds and governments. Is this something that is being built with them in mind, or is this more of a consumer-minded approach?
Well, I think that historically, crypto has not had anyone's mind in approach. This was really built by technologists for technologists. And I think we're now starting to usher in this era where we're introducing this technology into these different domains and these different camps. And so when it comes to financial institutions or when it comes to regulators, they absolutely need to play a part in this. And I think that this is where history is going to kind of show itself or write itself correctly, that in order for them to participate, these rails need to maturize. And as part of that, we're going to start to see confidentiality and compliance be a part of those rails.
Man, I appreciate that a ton. Now, let's talk about the elephant in the room a little bit, because this is something that, people that have been around crypto long enough, when they hear about privacy, they're going to think about Zcash, or they're going to think about something like Tornado Cash. So I'm curious, for you, when we're talking about this era of confidential finance, what is the difference for you between private and compliance? Because as we talk about this, confidentiality and compliance sometimes can sound like a contradiction. So, walk me through this. Can you have both?
You absolutely can. Let me put it this way. Every new technology has good actors and bad actors. And this has always been the case. When you look at even the early internet itself, you had companies and technologies like Napster and Spotify. Both were pieces of software that let you download music from the internet and listen to it. But one said, we're going to do it for free and circumvent the entire system. And the other said, no, we're going to integrate with publishers and artists and charge a nominal fee to the user. And it's clear, one, which stood the test of time. But more importantly, it's also clear, two, which generated billions of dollars of value for artists everywhere. And I think that you see the same thing happening here in crypto as well, especially within this space around privacy and compliance. That you had things like Tornado Cash, which absolutely were trying to circumvent the system. And then you have new chains and new technologies, for example, like Aleo and Shield, where effectively this is now plugging into financial institutions. It's working with regulation to make sure that there is a compliant and confidential framework that is coherent for people to use. And I think that this is the version that's going to stand the test of time and also generate trillions of dollars of value for everyone around the world.
Yeah, I love that. And so following this line of thinking, there's been a lot of public debate around DeFi needing KYC or lack or not wanting KYC, right? It's not a popular take in crypto to KYC. It's something that a lot of people have, for various reasons, have their qualms with. And then there's another side of the field that is very much advocating for it. I'd love for you to speak on this a bit, in the way that you choose to.
Yeah, well, let me just start by saying that I don't think everything in DeFi needs KYC, but I do think that certain things are going to as we start to maturize and evolve. And what I mean is this: look, everyone is talking about tokenizing RWAs, right? Like stocks, bonds, real estate, you name it, whatever it may be. People want to bring these things on chain. In every other medium on planet Earth where these things are traded, there is always KYC in those venues. That has just been the rule. Like you go to the New York Stock Exchange and like they need to know who you are. That's the law. And I think it's going to be no different in crypto. But again, that doesn't mean that everything in crypto is going to need KYC. It means the assets themselves that need to be protected and regulated are going to be. And from my perspective, I will say, maybe it's a bit of a controversial take, but like I don't think KYC in its current form is going to work in crypto. I just don't believe that the model that we've used, which is effectively a very centralized model where people are uploading driver's licenses and passport photos and selfies of themselves onto a website to be stored in a database just for hackers to be able to break in, is going to stand the test of time. I really think that that model is broken, and we're even seeing it on the internet today. Increasingly there's age verification. There's websites that are starting to do this. And I'm personally, while I'm an advocate and a supporter of protecting, for example, children online to make sure that they're not accessing content they're not supposed to. I also think that there are more privacy preserving ways of enforcing these types of age verifications and generally speaking KYC broadly that protect the user's personal data, that allows them to retain control over their information and doesn't compromise them when hackers inevitably breach things. The example I like to point to is look at Experian. It's like the largest credit union probably in the world. And like it's over here just getting hacked, and hackers are leaking social security numbers and home addresses and phone numbers and people's sensitive details. And this has serious downstream implications. And I don't think we can be doing the same thing with people's passport data, with their driver's licenses, with all this stuff. Like this is all sensitive information. So what I'm advocating for is that when these things come on chain, there's going to be a need to introduce privacy preserving KYC. And this is where I'd say like the field of zero knowledge proofs, the field of cryptography, generally speaking, has truly built solutions that can actually solve for this. And I think that this is an opportunity to really take advantage of where the technology has been. Like 10 years ago, the things that I'm telling you right now would not have been possible. Right now, this is something that is very much now finally practical because the research has gotten there. And computing, like chips themselves, have advanced to the point where it's now practical. I can now start to show you, for example, that I'm over the age of 18. I can prove to you mathematically I'm over the age of 18 without revealing to you even my date of birth, without revealing to you my driver's license details, like my home address, my eye color, like any of this stuff, my blood type, whatever it may be that's on your driver's license, right? And like those are things that I would think are sensitive, that if you're going to upload it online, there's a risk that it very much could get lost, stolen, and get sold on the internet, and that's a problem. So I think that in the same way for that, in crypto and certainly on Web3 rails, like this problem only becomes broader in the sense that like blockchains are immutable. They're going to store this information permanently. So we cannot have a system where this type of data just lives on chain. And more so, we need a system that's actually going to vet this stuff correctly. And this is where I think the magic of cryptography and zero knowledge proof specifically is actually a really good answer.
Yeah, no, I'm picking up everything you're putting down. I'm sure many people who are listening as well. And I completely agree. I think ZK technology, this is the exact intended use that I think we'll start to see it proliferate more and more into like the regular world, quote unquote. But I want to bring it back to you. I could take this on such a tangent, man. This is so fascinating to me. But I want to take it a bit back to Shield because this is something that you mentioned earlier that you have a Shield wallet and that there's like some new Shield oriented magic on the horizon. So can you talk to us a little bit about what you're building and how it works for folks who are listening?
Yeah, I'll stop teasing you guys with it. But basically, look, like we launched Shield Wallet at ETH Denver this year, and it's gotten a lot of great traction already. It is one of the first multi-asset privacy wallets in the market, period. We support wrap Bitcoin, Ethereum, Solana. Circle natively issues USDC on it. Paxos has USAD on it. Hyperlane also has bridges, Nears plugged into it. So, it has all the kind of functionalities you'd expect from a wallet. And we're now taking it to the next stage, which is we're building out something called Shield Swap. The idea here is to really create a broader finance portfolio that allows for people to be able to swap to own assets and trade without, one, revealing your identity, two, without revealing your strategies, and three, without revealing your portfolio. These are things that I think people, especially Wall Street, cares deeply about when they're trading on any venue, regulated or not, and it's because there's money on the line, for them. They don't want people to be able to go onto their Etherscan and see their wallet and pull up the past 1,000 trades and just figure out what their strategy is. They've poured so much time, money, and energy into developing these things. It's a non-starter for a lot of these people. So from my point of view, ShieldSwap is really meant to be the introduction of confidential finance from our point of view, because it is really an opportunity to showcase how to do it right.
That's amazing, man. So walk me through it really quickly. So what can the world see and what can't they see with Shield Swap?
Yeah, so the idea is that, traders really want to know how much liquidity there is on the books. So because of that, it's designed so that you can go see how much there is in the reserves for tokens. You can see how much is available, how much is there. But ultimately, as the trades are executing, you can't see who it is that's executing the trades. You also therefore can't link trades across each other. So people can't see, oh, this person traded here and then traded there. There is no cross linkage across transactions. And because of that, ultimately also the assets then get stored into your Shield wallet. And Shield wallet itself is a private wallet. It is a confidential wallet. So it does not reveal your portfolio holdings after you've done the swap.
Whoa. So we have a question for the audience. Who is this for? When it's day one of this launch, like who do you want walking through the door?
Well, I think that this is ultimately going to be very valuable for those who are professional traders, for those who have a lot of money on the lines, for financial institutions who are holding the balances for portfolios of large customers or large enterprises, because these are the people where the volume really matters, right? Like let's say you're Jane Street or your Citadel. One of the problems with them is that they truly do not want people stalking their system. They don't want people to see what's going on because their strategies are sensitive. It's highly valuable things. But additionally, like take a Vanguard, for example. They have these ETFs that have pension funds and retirement funds in them. Imagine when they're rebalancing like 1% of the portfolio that you have the entire crypto industry's traders just front running them. That would be insane. And so from my point of view, like these people can't come on chain until there's some concept of confidentiality and some concept of compliance in it. I think that these two ideas are naturally tied to each other, that one cannot exist without the other. And once these things exist, you now have a venue that's mature enough to allow them to start to participate.
Yeah, and as you're saying it, I have so many more questions because we were talking about this during our 24/7 financial markets talk, and we were talking about this with, some of our more institutional oriented guests that were on earlier today. How is Wall Street participating in crypto now since this doesn't exist?
Well, they're doing it the old-fashioned way. They're doing it through proxies effectively. Like you've seen, for example, there's been, the Bitcoin ETFs. There's also been like, strategy. There's been, SBET, DFDV. There's all sorts of these, companies, these tokenized companies that are effectively acting as a proxy into crypto. And I just don't think that these, they call them digital asset treasuries. I don't think that these are going to be the best format long term. I think it's the format that's being used right now because it's what's possible from a regulation standpoint. But it's also because of the shortcomings of what crypto rails even offer. I do think that as time goes on, that's going to change. And I do think that already you're starting to see different types of Wall Street financial institutions start to dabble in real crypto and in real on-chain finance. They've gotten very interested in yield vaults. They've gotten really interested in different types of market opportunities. And I think that that's going to continue to grow. But they can't move size right now without being traced, without being followed, without being watched and monitored. And so I think that's a huge problem that needs to get solved.
Man, I have so many more questions for you, but I know we're getting close to the end of our time together, and I'm so grateful for it. As we're starting to close this out, what's next for Shield? Where can people find out more? How can they get involved? I'm sure there's a lot of people in the audience like me that are keen to learn more about this.
Well, I'll start by saying Shield Wallet is launched. So you can find us in the iOS App Store. You can find us in the Android Play Store and also in the Chrome Web Store for your browser. If you go to shield.app, you can also learn more about it. With Shield Swap, this is going to be opening up into early access in the coming weeks. And with that, I'm very excited to share. You'll be able to go to shield.fi and you'll be able to apply and you can basically be an early trader on the platform. But yeah, right now it's in early access. We're looking for folks who are really interested in using the product, giving us some honest feedback, and trying to make sure that this is a venue that is not only professionally done, but it's also one that meets the requirements for people before we turn it on and open it to the public.
Man, I'm so grateful. Literal alpha. I am so grateful that we got that on the show. And I'm sure a lot of people are going to be reaching out. I'm incredibly grateful. And as we're closing this out, Howard, I'm really curious, what's next for you? What's next for the second half of 2026?
I mean, we're just continuing to ramp up more and more. With Aleo now kind of built, we now have this opportunity to start to build out products, especially in the finance side of things. I'm very excited to continue to expand the horizons of what's possible, both on the assets that are supported and also on the types of financial products that are out there. We do have a lot of people that I'm talking to that are excited to see lending markets come online, to see perps come online, to see RWAs become available, things like this. I think we're exploring every opportunity or every avenue that's out there. And trying to figure out what makes sense. Ultimately, I think that Wall Street is getting very excited about on-chain finance and especially confidential on-chain finance. And so, based on the demand, based on where the market goes, we're very excited to be building for that.
I'm really excited too, man. And I'm sure a lot of folks who are tuned in as well are. Thank you so much, Howard. This is an incredible talk, man. I'm so grateful, and I hope that we can do it again soon. This is exciting times.
Will, thanks for having me on, and I'm looking forward to doing it again.
Let's go.